Hello friends, we'll be discussing certain details about how profit or loss computation is supposed to be happening when there is a partial sale of asset under SLM method. Let's figure it out with the illustration that will be mentioned down here. So when we speak about partial sale of asset, it is a little different as compared to a complete sale of asset. If you remember, when there is a complete sale of asset, you don't have to worry about what kind of depreciation is supposed to be provided, because whenever the depreciation is done, it is calculated on the whole value of the asset and not on parts or not in bits and pieces. So this is how the same calculation will be done. The only difference is that a part of the asset will be sold out, however the rest part will be still pending. So the depreciation calculation remains for the other part as well. However, for the one that has been sold out, it will be only until the tenure for which it has been used, and the other part will be used or calculated for the whole tenure. That means for the whole financial year it will be used. So let's note down some illustrations here for your reference, and then we can go ahead with explaining that illustration for your reference. Let's start it. So this is a comprehensive sum that we have mentioned here. It includes complete sale of asset as well. It includes partial sale of asset as well. Complete sale has been purposely mentioned so that you can understand or have a grip on it. And similarly, you can go ahead with the partial sale of asset also as mentioned as per the topic details. So let's go ahead and read this transaction so that you can jot down these details, and further going ahead, you can have an experience of your own while solving questions like these. The question states that Messrs. XY Limited gives out depreciation details for the year 2018, financial year being 18-19, as the April and March tenure has been provided. That means the year starts from April and ends in March. So if they are mentioning 2018, that means it is 2018 until 2019. That's how the calculation is supposed to be done. So let's figure out few more details on this question. On 1st of April 2016, they purchased machine 1 for rupees 15 lakhs. This has been mentioned. 1st of December 2016, again in the same year, they purchased another machine, that means machine 2 for rupees 10 lakhs. 1st of April 2017, there was another machine 3, that was purchased for rupees 6 lakhs, as which has been mentioned here in the question. On 1st of May 2018, machine 4, which was purchased for rupees 7 lakh, has also been mentioned in this specific illustration. Let's go ahead and figure out what are the details have been mentioned here. On 31st March 2019, they have sold out machine 2 for rupees 7 lakhs. Also on the same date, that means 31st March 2019, a part of the machine 1, which was costing for rupees 8 lakh, was sold out for rupees 5 lakh 50,000. So if you can understand, machine 1, the total cost was somewhere around 15 lakhs. Out of that, only a part of it, which was costing around 8 lakhs, was sold out for 5 lakh 50,000. Now we have to figure out that whether after providing depreciation until the sale of date transaction, whether this value is over and above the written down value, or as compared to the value which has been mentioned in the question, that is the sale price. So we have to figure out basically there is a profit or loss here. Rate of depreciation has been provided at the rate of 10% under SLM method. We have to calculate the profit, loss in this situation, the depreciation that has been provided together, and the value of all these assets. These are the three things that we have to calculate in this illustration, and we'll understand whether there is a partial sale of asset or a complete sale of asset, how to deal with it with the SLM method. Let's start with it. We'll start with the timeline first so that it is easy for you to gauge down all these details under one single page or one single sheet itself. So if you can see, we have created the timeline here, segregated into financial years 2016, 17, 17, 18 and 18, 19. Let's figure it out one by one, and you'll understand in which year what transaction has been done and what needs to be done in that specific financial year. Let's go with the first financial year 2016, 17. Machine 1 was purchased on 1st of April 2016 for 15 lakh as mentioned in the question. Machine 2 was purchased for 10 lakhs in the same year, precisely in the month of December, which we have mentioned in the question. The tenure for machine 1 for calculating depreciation is 12 months because it has been purchased in the month of April. However, for machine 2, it will be only 4 months, and it has been calculated, or rather it has been purchased in the month of December. So from December until March, we have 4 months tenure. Depreciation for both these assets will be calculated on the basis of these two tenures itself at the rate of 10% under SLM method. We'll go on calculating the depreciation, or rather the details about financial year 2017-18 as well. Let's go ahead and figure it out. Machine 3 was purchased on 1st of April 2017 for 6 lakh rupees, which has been mentioned in the question. Tenure is for 12 months because it has been purchased on 1st of April 2016, or rather when we can talk about April 2017-18, this machine has been purchased in the month of April. So the tenure is 12 months, rate of depreciation is 10% on SLM method. Again in 2018-19, we have on 1st of May 2018, machine 4 which was purchased for rupees 7 lakhs as mentioned in the question. Now calculating the tenure here will be only for 11 months, as the depreciation has to be provided from the date of purchase until the financial year end, which is 31st March in this question. Apart from that, we have two sale transactions here where we have to calculate the profit and loss. So 31st March 2019, we have one transaction which is related to sale, complete sale of asset, and the other one being partial sale of asset. Let's go with the first complete sale of asset transaction. Machine 2 which was purchased in the year 2017-18 was sold out, or rather we can talk about this machine which was purchased in the year 2016 end December. If you remember, that specific transaction or this specific machine has been sold out for rupees 7 lakh, which has been mentioned in the question. Also, part of the machine 1 which was costing rupees 8 lakh was sold out for 5,50,000. This timeline gives you a specific detail, or rather in-depth detail of all these transactions which are marked up in the sum. You have segregated them as per all the calculation working that you need to do, and now you'll be going ahead with the calculation. So this timeline eases up all the calculation part, and you don't have to worry about which transaction comes when, because in timeline you prepare the same thing and it becomes easy for you to calculate details in near future. Let's go ahead with the working part, or rather calculation of depreciation in each of the scenarios or each of this financial year. So we've done the calculation for the year 2016-17, whereby we had two machines in question. Machine 1 which was costing rupees 15 lakhs, and we have calculated the depreciation on it. That means we have got one total here, 13,50,000, as mentioned here in the illustration problem solving sheet. Now in the second machine, we have the tenure being used only for 4 months, as we have calculated the same in timeline. So here, out of 10 lakhs which is the cost of that machine, 33,333 has been subtracted as a part of depreciation. So the balance which is left is 9,66,667 is the total of that specific value or asset under 2016-17 criteria. Now we'll go with the next working, that is machine 2 working. For 2017-18 also we have a similar kind of working here. That means cost minus depreciation gives you the book value here. In this case, 6 lakh was the cost of that asset. 10% depreciation at the rate of 12 months per annum gives you 60,000 depreciation for this specific asset, as this was purchased in the year 2016-17, or rather we can say that 17-18 April month. Hence 12 months denomination has been calculated, and the total depreciation was calculated as 60,000, which will be subtracted from the cost of 6 lakh. You get a book value of 5,40,000. So this is the only calculation in the year 17-18. List will go ahead with the calculation of depreciation for the year 18-19. Again, in the year 2018-19, we have machine 4 which was purchased for rupees 7 lakhs. At the rate of 10% depreciation on it, we have for 11 months tenure 64,167. So we'll be subtracting this from the total amount of 7 lakhs to calculate the book value of that specific asset as of 2018-19. So now that we have calculated the depreciation for machine 4 as well, the book value is 6,35,833. That is the value of that specific asset. If you can see in this specific working, we have done the basic calculation for each and every asset for first year itself. That means assets which were used in 2017, 18, 18, 19, we haven't calculated it, because we'll be calculating it when we'll be going through the complete depreciation calculation. So this is only done for first year 17, 18, 18, 19 and 16, 17, whichever the case may be, for each and every illustration or each and every machine in the question. Now let's go ahead with the calculation of total depreciation for all these assets. So machine 1, machine 2, machine 3, machine 4, right from the financial year and start to end, we'll calculate the depreciation and understand how the depreciation pattern comes up in this specific illustration. Let's do it. So if you can see, we have done the calculation for machine 1, where we have figured out that for the first 2 years, that means 16, 17, 17, 18, we have calculated the normal depreciation on the cost of the original asset, that means 15 lakh rupees. In the financial year 18-19, we have segregated them into two parts. The reason why is because there is a partial sale of assets. So you need to figure out the depreciation on the partial sale as well as in the asset which is still there with the company of that part itself. So if you can see, for 16-17, we have done the calculation in the following format. 15 lakhs multiplied by 10% rate of interest, because this specific asset has been used for 12 months, hence the depreciation is 1,50,000. If you subtract it, you get a balance of 13,50,000 out of it. And after that, if you again subtract with 1,50,000, because this is still SLM method, hence a constant depreciation is being charged every year, you still get a balance of 12 lakh by the year end 17-18. Now in the year 18-19, we have segregated the original cost 15 lakhs into two types, one 8 lakh and the other one 7 lakhs, because in the question they had mentioned that in this specific financial year they have sold out a part costing of rupees 8 lakh for rupees 5 lakh 50,000. So we have to figure out right from the year 2016-17 the depreciation for all these assets and the written down value of that specific asset or that specific part as of 16-17, 17-18 and 18-19. So the value that we figure out in 18-19 will be able to understand whether there is profit or loss as compared to the sale price. The other part, 7 lakh rupees, is supposed to be handled in a normal way. That means right from the depreciation in 2016-17, it will follow the same structure. So let's figure it out. So for both 8 lakh and 7 lakh, 10% depreciation will be calculated on it, which is 80,000 and 70,000. So every year you'll be subtracting 80,000. Now from the first part, which is costing 8 lakh rupees, which has been sold out, if you figure out 3 years depreciation on it straight out, that means 1,60,000, which is for first 2 years, and another 80,000 for the next year. If you subtract it, you get a total of 5,60,000. 8 lakh minus 2,40,000 gives you a total of 5,60,000 here. This asset has been sold out for rupees 5,50,000. That will be done in the next sheet when we go ahead with the sale transaction details. However, right now the written down value of that part is 5,60,000 as per the market price. And similarly, for 7 lakh asset, that means out of machine 1, 15 lakh total, 8 lakh which has been segregated and calculated, the rest 7 lakh balance is still there. And from 7 lakh 2016, if you subtract 70,000 at the rate of 10% per annum, which is 2,10,000, you get a total of 4,90,000 here. So you get a total of 4,90,000 here. This makes you understand that whatever details you have been dealing with has been mentioned in machine 1 calculation. Now let's do the same calculation for machine 2. If you can see, the similar calculation has been done for machine 2 as well. The cost of that asset was 10 lakh rupees. However, the first year tenure was only for 4 months usage. That means 33,333 would have been the depreciation there. So if you subtract that from the total cost, that gives you 9,66,667. Now this will be the written down value of that specific asset in the year 16-17. Similarly, we have to figure out the written down value of this specific asset for 16-17, 17-18, 18-19 as well. Now, when you understand how to calculate these details, you need to figure out that 1 lakh is the rate of depreciation. So, out of the first written down value, that is 9,66,667, straight away subtract 2 lakhs, which gives you 7,66,667 rupees. Now, that you understand that this asset has been sold out for rupees 7 lakhs, which we'll figure out in the next part, that means sale transaction working. Let's do the same calculation for machine 3 and machine 4 as well. So we've done the calculation for machine 3 as well, which is a very simple and basic calculation. Just deduct the depreciation for 17-18 and 18-19 and you will get the total for 18-19 written down value, which is 4,80,000. Cost of this asset is 6 lakh. 10% depreciation for 12 months usage will be 60,000. So 1,20,000 in total for both these years, 17-18, 18-19. Out of 6 lakh, you get a balance of 4,80,000. Straight, simple, easy to understand. Let's do it for machine 4, post which will mark the closure of working for depreciation, and then we'll start with the depreciation or rather the sale transaction details or computation of profit and loss. So machine 4 as well, we have completed the depreciation calculation. That means for 1819 we have calculated the depreciation. That means for this specific machine which was used only for 11 minutes, the same tenure has been calculated at the rate of 10%. 7 lakhs is the cost of this, and we get a total of, as mentioned, depreciation which is for 11 months. So 64,167 was the depreciation that was provided here, and that is the total depreciation that we have provided for this machine. Now let's go ahead with the sale transaction details, post which will mark the closure of the sum. So we figured out the sale transaction details as well. For machine 1, we had the total cost of that specific asset being 8 lakh rupees as segregated into 8 lakh and 7 lakh, which was sold out for 5 lakh 50,000. However, the book value of that specific asset at the end of the year 1819 was somewhere around 5 lakh 60,000. Hence, we have suffered a loss of 10,000 here. Similarly, for machine 2, we had the cost of 10 lakh which was sold out for 7 lakh rupees. However, the book value of that specific asset was somewhere around 7 lakh 66,667. We have sold it at a price less than that. That means we have suffered a loss of 66,667 rupees on this. So in both these transactions, we have suffered a loss here. So what we'll be doing is that we'll be mentioning these details. After this, we'll be calculating the value of assets that we have with us. That means from machine 1, the part which is for 7 lakh rupees, it is still with us, the value of that asset. Machine 2 has been sold out. Machine 3 and machine 4 are still with us. So we have the value of those assets. We'll be mentioning it down and we'll post that. We'll mark the closure of it. So as you can see, we have done the valuation of all assets that we have. For machine 1 part, that has been mentioned here. Machine 2 has been sold out. Machine 3 and machine 4, total value of all those assets after deducting the depreciation has been already mentioned. So the total of all these assets is 16,05,833. So this is how you calculate if there is a partial sale of asset under SLM method. However, in this question, you had a complete as well as partial sale, so that you have a comprehensive detail of both these sums, and both these sums are getting solved and the clarity is being sought for all these sums in one illustration itself. So I hope this illustration gave you a lot of clarity on how to solve a illustration which is related to partial sale of asset under SLM method. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.